Hey everyone, welcome back to Corporate Decoder. Today we are diving deep into Compass Incorporated's latest financial report, and let me tell you, this one has some interesting moves, especially with a huge merger on the horizon. Before we jump in, if you love cutting through the corporate jargon to get straight to the important stuff, make sure you have subscribed. And if you want to keep the conversation going with us and other financially curious minds, join our Discord community. Link is in the description below. Compass Incorporated has just dropped their quarterly report, and it paints a picture of a company navigating a major shift. We are looking at the period ending the 30th of September 2025, and there are some big numbers and even bigger plans shaping their future. Let us first look at the company's financial health, their balance sheet for the 30th of September 2025 compared to the end of 2024. Total assets have jumped significantly from $1.178 billion to $1.553 billion. A huge part of this growth comes from goodwill, shooting up from $233.6 million to $479.4 million. And intangible assets, which more than doubled from $73.8 million to $211.8 million. This jump in goodwill and intangibles strongly suggests some major acquisitions are playing a big role. Meanwhile, total liabilities also crept up from $765.6 million to $775.1 million. Now, let's talk about the money coming in. For the 3 months ending the 30th of September, 2025 revenue hit $1.846 billion. That is a solid increase of about 23.6% compared to the same period last year. Looking at a longer stretch, the 9 months ending the 30th of September. 2025 saw revenue reach $5.261 billion, up by nearly 24% from the previous year. This growth is largely credited to more agents joining their platform, including those who came with recent acquisitions. Of course, revenue comes with costs. Commissions and related expenses followed revenue, increasing by about 22.5% for the quarter and 22.9% for the 9-month period. However, as a percentage of revenue, these costs actually decreased slightly, which is a good sign. This improvement is down to recent acquisitions bringing in agents who have more favorable commission splits compared to their core business. Compass is clearly investing in its future, with research and development expenses climbing by over 41% for the quarter and 27% for the 9 months. Even after taking out stock-based compensation, which is a significant cost, this R&D spending a strong signal that they are pushing innovation, likely to stay ahead in the competitive real estate tech market. And speaking of big moves, there is a significant expense line item related to the Anywhere merger. For the 3 and 9 months ending the 30th of September, 2025, they reported $7.5 million in merger transaction and integration expenses. This is the cost of doing a deal like this, with investment banking and legal fees piling up even before the ink is fully dry. Despite the revenue growth, the company is still reporting a net loss. For the 3 months ending the 30th of September 2025, the net loss attributable to Compass Incorporated was $4.6 million, which is actually an improvement from the $1.7 million loss in the same period last year. For the 9-month period, the net loss was $15.9 million. Also an improvement from a $113.9 million loss in the prior year. While any loss is not ideal, seeing these losses shrink year over year is a positive trend. To get a clearer picture beyond the net loss numbers, Compass also reports adjusted EBITDA. This metric, which excludes things like stock-based compensation and merger expenses, shows a much healthier picture. Their adjusted EBITDA margin for the quarter was 5.1%, up from 3.5% last year, and for the 9-month period, it was 4.5%, a significant jump from 2.6% last year. This really highlights that the core business operations are becoming more profitable, even if the overall net income is still in the red due to various factors like merger costs and legacy investments. Let's look at some key performance indicators. Total transactions for the quarter rose by 21.5% to 67,886, and for the 9 months they jumped 22.8% to 190,032. This shows solid growth in the actual deals by their agents. Gross transaction value, which is the total dollar value of homes sold, also saw a healthy bump. It increased by 22.5% for the quarter to $70.7 billion, and by 23.7% for the 9 months to $201.4 billion. This growth is directly tied to the expanding agent network. The number of principal agents, which are the key leaders on their platform, grew by a substantial 22.8% to 21,550 as of the 30th of September 2025. This growth is largely thanks to recent acquisitions and ongoing recruitment efforts. Now for the elephant in the room, the proposed merger with Anywhere Real Estate Incorporated. This is a massive deal where Compass will acquire Anywhere, and it is set to close in the second half of 2026. This merger is expected to be a game changer, forming a much larger entity in the real estate market. They are not just buying a company, they are buying its entire book of business, which includes significant debt. This is a huge bet on future growth and synergies. The company has been caught up in some significant legal battles, particularly concerning real estate commission practices. They have settled some major antitrust lawsuits, agreeing to pay substantial sums and change business practices. While they are moving forward, these legal issues have undoubtedly had an impact on their operations and financials. And the ongoing scrutiny from regulators is a significant risk factor. Looking at the risks, the company is clearly concerned about the impact of the Anywhere merger not going through or being delayed. The conditions for the merger are complex, involving shareholder approvals, regulatory clearances, and financing, and there is a clear acknowledgement that any hiccup could seriously hurt their business. They also face significant costs if the merger is terminated under certain circumstances, which could be hundreds of millions of dollars. A crucial risk highlighted is that they might not have uncovered all potential liabilities of Anywhere during their due diligence. This is a classic concern in big mergers, where hidden problems can surface and significantly impact the combined entity's future. The report also warns that the costs associated with this merger are likely to be higher than initially expected. This is common as integration is complex and often encounters unforeseen expenses. Scroll no, let's shift to the overall picture and what this all means. Compass Incorporated is in a period of massive transformation. On one hand, their core brokerage business is showing strong revenue growth driven by an increasing number of agents and transactions. Their adjusted EBITDA is improving, suggesting operational efficiency is enhancing. They are also heavily investing in technology and R&D, which is crucial for staying competitive in the evolving real estate tech landscape. However, the company is still operating at a net loss, which is a concern. Even if the losses are shrinking, the gargantuan merger with Anywhere Real Estate Incorporated is the dominant narrative here. It is a bold, high risk, high reward move. They are taking on significant debt, and the successful integration of Anywhere will be paramount. If they can execute this merger effectively, realizing the projected cost synergies and expanding their market reach, they could become a dominant force. But the risks are substantial, from regulatory hurdles and integration challenges to the potential for undiscovered liabilities in the acquired company. The antitrust lawsuits also highlight the ongoing regulatory pressures common in the real estate industry. Ultimately, Compass appears to be betting big on consolidating its position through aggressive growth and strategic acquisitions. The question is whether they can successfully navigate the complexities and costs of these endeavors to achieve long-term profitability. Alright, that is our deep dive into Compass Incorporated's latest financial report. What do you think of this massive merger and its potential impact? Are they making a smart bet or taking on too much risk? Let us know your thoughts in the comments below. If you found this analysis helpful, give it a thumbs up and subscribe for more corporate breakdowns. And don't forget to join our Discord for more discussions. Thanks for watching, and we will see you in the next one.